So traders, we've been getting a slide in the actual stock market as the last few days, but there's actually something really interesting. We may be getting ready for a very sharp snapback really quickly. And I'll share with you the reason why, but also the mining sector has continued to roll over. What has been the big lessons to learn as a technical trader when it comes to the mining sector that I think a lot of people have missed that I've been talking about, and I want to share that with you to help you become a much better trader, plus also to give you market updates. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, just to let you know, yesterday I opened up 2 spots for an 80% off to my private inner circle coaching program. This is my top tier private coaching program. Coaching starts today and ends at the end of this year. I'm giving 80% off to the first 2 people. I have 1 spot left. So for the very first person to email me at haltrader@gmail.com, Hal, my last name, trader@gmail.com, gets that last spot for that 80% off. For the very first person only. So let's actually talk about here when it comes to the stock market, because the thing that I'm really what I was saying at the intro of the stock market, or in the intro of this market update, was this. I said that we could be getting ready for a hard and fast snapback. Now, there's 2 schools of thoughts that I'm sort of keeping an eye on here. Firstly, what I'm looking at is that if we look at the Dow Jones, okay, this is the Dow Jones chart here, and we can see, look at these gaps. There is gaps and gaps galore. Now, does that mean that these gaps will be filled? But the thing is that does that mean we're getting ready for a hard and fast snapback first? Like, it's going to be really, really, really interesting to see when these gaps here get filled. So I know, and we've actually broken this low through here. So are we about to see, because we've got the Fed announcement coming out, are we about to see this market start to rally back up and start to close at least some of these gaps through here first? Because we are definitely very, very overextended on the downside. And if you can see that's what we're seeing through there. And if we go to the other indices as well, you can see here as well too. Look at this here. So especially the S&P 500, look at this here. 1 big gap, 2 big gaps. So there's a lot of panic selling in the markets. It's not a changing trend yet, but the big question I'm focusing on right now is, are we about to see a hard and fast snapback out of this? Like, maybe the Fed's going to do something that's going to cause this to happen. I don't know. But look at that big gap there. And look at that big gap there. So the really interesting thing to see this right now is that, are we about to see this thing come back up and do that? And also same for the good old Nasdaq as well too. Big gaps. So it's really interesting to see what's going to happen there. So that's actually what's going on when it comes to that. Now, on the flip side, if we do continue to see this downward pressure, because we are in a downward trend, if we do continue to see this downward pressure, then on the Nasdaq, you can see that there's a sort of X marks the spot around that 10,000. So just below where we are right now, this is looking at a weekly long-term chart, okay? And you can see here, this is back in 09, that when we get down to, say, to the 10,000 level, okay, to this 10,000 level down to here, we could be getting ready for a very, 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 very strong bounce. So maybe we do get a bit of a strong bounce where we are right now on a short term, because remember, this is a weekly chart, right? So maybe we do get something like that, and then it does something like that, and then maybe we continue down to there. So if the market does get down towards that 10,000, 9,500 on the Nasdaq, then that's probably going to be a significant major long-term buying point, because it's actually X marks the spot. X marks the spot simply means we have a resistance point through here, okay, support, and then look at this here. It's actually both this horizontal and this long-term level comes into play around that 10,000 level. If we use the same analysis on the S&P 500, that we can see that possibly there is a little bit of support through there. So I'd have to say this whole area, okay, so I'm just going to bring this here. I'm going to make this a bit thicker, okay, and I'm going to make and I'm going to duplicate that for a minute, and I'm going to put that. So this whole area really from that 3 to 3,500, you can see now. What am I doing here? Okay, I'm where my eye is right now. Just so you know, traders, is that my eye is. I'm looking at this major resistance here, and this major resistance and the major support. So I can see, especially this line through here. We had this, and let me just zoom in so you can actually see it a bit closer. So where my eye is right now is I'm seeing that, remember this is a weekly chart, okay? So this is a major resistance here, major support, major support. So I know that around this 3,500 area, there's probably going to be a bit of a strong support. Plus also this area through here. So it's more like that 3.5 down to probably 3 on the markets. That's where we're going to find probably a really good strong support, okay? But then what I also do, if I zoom back out looking at this big picture, all I did is I created a parallel. All I did is connect the low here, that one major low to the last major low of the COVID crash, right? That's all I did through there, and I just created the parallel trend line, the exact same line. And all I'm doing now is I'm just going to bring it up to see when I can get the most touches. And the most touches I'm looking for is this. So I can see that obviously we have this bounce through here. We have all of a bounce through there. You see it bounces there and bounces there. So I know that this angle, this type of angle in this particular market, which is the S&P, is relevant because we're getting a lot of bounces through there. What you don't want to see is yes, you may get a few bounces, but if we got something like this happening here, and then it did this through here, see how we're not really getting a good bounce, right? But now you can see that we are getting a bounce. The reason why I'm bringing that up is because as the S&P continues down, now again, we could get a bit of a pullback here for a week or two and then continue down, okay? If the S&P, or when the S&P, because I believe it's going to happen, when the S&P starts to get into that 3,500, it's probably going to be a very, very, very strong support. And maybe that's what we're going to do. Because if we look at that, and then we look at, say, a Fibonacci retracement level from the low to the high, we also start to go into levels of the 50% level is actually right on that resistance level there. So that 50 to 60% level of this major retracement that's where it is there. So if I was a betting man, I would say that the market's probably going to come down through here over the next few months, find a bit of support, and then maybe make its way back up, giving us a big move up, big pull down. And I don't know, maybe at this time through here, maybe that's when they start to do, they start to change the tune or whatever, or maybe inflation starts to go down, something that's going to cause this market to, make its move, okay? And then same for the Dow Jones as well. The Dow Jones, the same sort of thing as what I've just done on the S&P. I've created that long-term trend line, and then we've got this long-term level through here, and you can see how it's actually bouncing through here, bounce, bounce. You can see all the different bounces, right? But then also what I did is then I zoomed in, and then now we can see we have a major resistance point through here and a major resistance point through here. So as the Dow Jones continues to go down through to here, around about that 29,000 area, that 29 to 28,000 area, that area there is sort of X marks the spot. This level through here and this level through here. So I would expect the market to find a bit of support through it. Now, I don't ever buy just the market just because it's down to these levels through here, right? Because we could slice through that like butter and then continue down to this level through here, okay? So, but what we want to wait for is we want to see that does it actually bounce and so on and so forth. So they're the actual big keys that I'm focusing on in the markets through there when it comes to that. Now, let's go have a look at the mining sector here. The mining sector has continued to roll over here. And what I was saying about in the introduction with the actual mining sector is that one of the biggest mistakes that I made long term, and if you are struggling with the trading right now, guys, it's just don't be hard on yourself, okay? Just make sure you reach out, make sure you do something to get some support and get some help if you are struggling with the trading right now. Because I know a lot of traders, like even in the mining sector, were hoping that this market's going to continue up. And so my analysis has always been rule number 1, what's the trend? Rule number 2, never trade against the trend, right? And so I was saying, and I've said for a while now, that the mining sector has actually been in a pullback. That's all it is. We've had a very strong move down, and we've just got a pullback through here, and now we've actually broken out. And so I was saying that traders, the trend is actually down. This is just the pullback before we continue the trend down. And so that's the GDXJ. GDX, the same sort of thing. The SILJ, again, the same sort of thing. And so what you want to do is, as you can see, look at this here. We had a major low, lower low, and then the market made what? A lower high. So then the market pulled back through here, and I was saying nothing has actually changed, traders. Like nothing has actually changed, which simply means the sellers are still in control. This is just the pullback. The market goes down, and then we get a pullback, and then everyone thinks, or the amateurs think, that this pullback is a change in trend. It's not, because the trend is lower highs. How do we get lower highs? We go through pullbacks. Now we're getting this lower high. We're continuing down. So the big mistake that I'm finding that a lot of traders make, and traders, I made this mistake for so long because I threw my thoughts at the markets, and that was always the biggest problem with my trading for so long. Is I kept saying, well, this market cannot do this, and we start to throw our thoughts based off a fundamental that may or may not affect the market today. That fundamental that is happening right now may or may not affect the market, right? So the biggest thing is when we're actually trading the market, we need to be a technician of the market, a technical trader. And the best quality trades are going to be when the market is in a trend and the market's talking to us. We have a low, we have a high, we have a low, and we have a lower high. And as you can see, the market's respected it, and we've actually continued down now. We've just gone through a pullback, and this is where a lot of traders were saying to me, like, John, you don't understand, the market's going up, it's in an upward trend. It's like, no, this is what the amateurs don't understand, this thing, that these pullback here, and especially when we started to reject it, that's the same sort of thing. Look at gold as well too. Gold is doing the exact same sort of thing as well, just going sideways through here. Now, when it comes to the gold market, there is something on a big picture that I'm noticing, and it's this level through here. Remember, I did like the exact same thing I did on the actual S&P 500 and also the Dow Jones. Well, I did the exact same thing on gold, and so there's a long-term major support level around the 1700. So that's where I believe we're going to. What I do believe is going to happen with the overall gold market is this. Let me just extend this out. What I do believe is going to happen with the overall gold market is we're going to get something like this. We may even come down through here, a bit of a bounce, come up through here, and we may spend a bit of time doing this, and then we start to see a breakout. Now, if we did that for another 12 months, traders, and we start to get a very strong breakout, get ready for one of the most craziest, biggest bull moves we've ever seen, because it's going to be absolutely just rocket. And you think 2,000, this thing's going to hit 5 or 10,000 by the end of this decade. That's what I truly believe. Now, it may not happen, so just keep everything at a good place, at a good pace, right? But I'm just sharing with you what I'm seeing through here, because we've got all this time through here, and then what's likely to happen as this decade unfolds with the uncertainty and the debt crisis and the currency crisis and all that sort of stuff that's going to happen on the second half of this decade. Yeah, watch for gold, because gold's probably going to do that. So, but if we do continue down with gold, there's longer term support levels around this sort of 1700 level that I'll be watching for. Moving over now through to silver, and silver, same sort of thing, right, traders? Rule number one, and as is always what? Trend. What is the trend? The trend is your friend until the end, right? And so we've had these long-term support levels, and it's actually quite a simple process, traders. If we can just look at this here, everything else, let's actually not focus on that. Let's not focus on inflation. Let's not focus on all these other people out there. Let's not focus on what all the fundamentals and all this sort of stuff and the debt crisis and all sort of stuff. Oh no. Okay, let's actually just remove all that. Okay, cool. This is very simple. What is the trend right now? Is there a trend right now? Well, we have a low, we have a high, we have a lower high, we have a lower low, and now we've actually made another lower high. So what is the trend right now? Not what we think or what we hope for or what we're fearful of happening, all that sort of emotions. Let's put it to the side. Logical. Let's just look. Okay, what is the trend? The trend is down for now. The trend is your friend until the end. When is the end of a trend? The end of a trend is when the market starts to rally up and we start to make a higher low, breaking past previous highs. That's when the end of the trend is, right? So sometimes the market can fake you out but not give you a higher low. We're looking for a higher low, breaking past previous highs. See, this is exactly what happened with this is exactly the thing that actually happened with silver, right? We had this we had this low point through here, an equal low, so there wasn't really any strong trend. Because sometimes you get a downtrend, lower highs and lower lows, an uptrend, higher lows and higher highs, and sometimes we just go through sideways, right? This period through here, there's no one in control, right? Absolutely no one in control. It's not making a strong uptrend, not making a strong downtrend. So, but if we have a look at this point through here, look at this here, low, low. But look what happened here. We made a what? We made a higher high. Oh, John, it's changed trend. No, remember I said before? We need a what? A higher low breaking past these previous highs. We came down. We made a higher low, didn't we? But did we break past previous highs? No. So the trend, this here was a whole fake out. It started to make a higher low. We didn't break past previous highs because in a downtrend, we want to see this. If we do get that, we get a higher high. We want to see a higher low. This is the trend. This is the change in trend point. Okay. So as you can see, and this is what the market does sometimes, it gives you a higher low, and then look what happened, completely failed, gave us a lower high, broke past previous lows. Now look, now who's in control? The sellers. As this market broke through here, we have a lower high, breaking past previous lows. What is that? Oh, that's a lower high, breaking past previous lows, is what? A downward trend. And then we dropped down, we made another lower low, rallied up, made another lower high, and we're breaking back down. So this is the one of the most simplest things in the markets to really master, but the biggest thing that's going to swing the big doors for you in these markets is going to be what I just talked about in these markets through here. So I hope this helps you out today, traders, and I'll see you in the next video. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.